Dear students, today we will discuss about the basic concept of business transaction, basic concept of accounting. What are the major terminologies in accounting that we will discuss? See, what do you mean by business transaction? The economic activity of exchanging of goods or services in exchange of money or money worth is called as a transaction. Any business entity, even if you take from the agriculture to the till now, from the border system to the foreign exchange, you can see that there will be exchange of the goods and services on behalf of the money or money worth any other values. So that can be exchanged. That's called as a transaction. The entity that carries out transaction is called as a business. Which company, right, or person who is going to have the uh, transaction which is related to the seller and buyer or exchanging of goods and services, that is called as a business. The goods or services, here you can see that the seller and buyer, whenever the seller sell the goods, buyer have to pay the amounts. Goods will be given to the buyer, buyer will on behalf of the goods he will exchange the money to the sellers. So everybody is doing this for profit reason. So the transaction means what are the money or goods which is exchanged. That's called as a transaction. Which entity is going to do all this transaction is called as a business. The important terminologies in the account, basically what are the major terminologies will be used that we will discuss. One is owner, the person who comes as a business and the undertakes the risk of carrying out the various business transactions. The person who is going to invest the money, who is going to take the all the kind of the risk for the business, even though he is get the profit, but meantime the all kind of the losses or all kind of the risk will be on the head of the owner. He is the bearer of the all kind of the risk which will come across during the business time. Next is capital. The initial money contribute the owner or proprietor to the start of the business. What are the investment they will invest? The initial stage money, how much they will contribute for start of their business, that's called as a capital. The drawings, the money withdrawn by the owner for personal use. So here one thing you have to keep it in mind. Always the business is different than the owner. Owner has his own personal expenditure and what are the investment he is doing for the business. Even though he is the owner of that particular business, but if he withdraw certain monies, he should be liable to pay back. It will be recorded. All the transactions should be kept in the journal entries. Right. Then is asset, the resource needed by the business to function effectively. It may be a machine, it may be a land, it may be any kind of the raw materials, all those resources which needed for the running the business, that's called as a asset. The liability, the obligation of the business are called as a liabilities. How much of your company is liable to pay their money back. So what they have already bought for startup business or running business or any kind of the crisis. So that all money should be paid back. That's called as a liability. Sales, the exchange of the product or service for the money, that is called as a sales. Obviously, what are the product they produce, they have to sell. So on behalf of that, they will get the money, that is called as a sales. Then comes purchase, the acquisition of the product or service for a money, that is called as a purchase. The This is what the major accounting definition will be there. The process of identifying, measuring, and communicating economic information to the permit informed judgment and decision by user of information, according to the American Accounting Association. Right. So what are those basic objectives of account? One is systematic record of transaction, determine the profitability based on the income and expenses, determine the financial position in terms of asset and liabilities. So why we all have to count all the transactions and why we have to do accounting is first it is a systematic record. So all those transactions, all those business exchange, what we are doing with any kind of the either sales or purchase, everything should be recorded for our future need. Then it will be by the accounting we can understand whether the business in the profitability or loss, or we have more income or expenditure. Then we can find out that what is the financial position in terms of asset and liability. What is our status, whether we have more assets or more liabilities. All those things we can identify. So for today, this is enough. Thank you. Next, what are those branches of accounting, everything we will discuss in next class. Thank you so much.